Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is revenue recognition, payments by the seller to the customer. Whoops, what is this? Usually it's payment by the customer to the seller. What is this all about? First of all, it's an issue for transaction price. For instance, car dealers, if I want to go and buy a new car, they will purchase my old car and they will sell me my new car. So we can have some double transactions here. They will give me money and I will be using this money to purchase a new car, or they will even pay me money for that. So how do we find the transaction price? And if the seller purchased distinct goods or services from the customer at the fair value of those goods or service or less, the seller accounts for that purchase as a separate transaction, pays more than fair value of those goods or service. Those excess payments are viewed as a refund, subtract from the amount the seller is entitled to receive when calculating the transaction price of the sale to the customer. So let's see a second scenario besides these car dealerships. Scarpin Corporation sells laptops and desktops to Santiago stores. However, Scarpin also pays Santiago to conduct special focus advertising programs. All transactions are on credit, and let's consider that they are done at the same time. So here, Scarpin Corporation sells laptops. So Santiago will pay Scarpin. However, Scarpin also pays Santiago for special focus advertising programs. So let's check the prices here because our problem is the transaction price. Santiago stores purchase from Scarpin Corporation, $10,000 or any other currency. Special focus advertising programs, 3. So if they are done at the same time, the accounts receivable, so Scarpin will receive a net value of 7. However, let's check the fair value of the advertising program. Scenario 1, $3,000. So we are paying the fair value, or if the fair value is 4, 5, or 6, we are paying less than fair value. How do we record it? That is easy. The accounts receivable will be the net number, so 7. Advertising expense will be 3, and the sales revenue will be 10. We cannot recognize a sales revenue of 7. We cannot go into the net number because there are 2 transactions here. And if they are completely separate, we just create 2 journal entries, one for regular revenue, one for regular advertising expense. The second scenario is more complicated, and that is why accounting is fun. The fair value is $2,000. I do wanna work with Santiago for these focus advertising, so we are paying them more than the fair value to avoid my competitor to be the one who will be doing that. So the first approach, most common in the US. So if you are in the US, that is the approach. Accounts receivable will be the same 7. The advertising expenses will be 2, will be only the fair value. So, okay, we are paying more. These additional payment are viewed as a refund, not an additional expense or additional purchase. If we are talking about car dealers, it would be inventory. So the sales revenue to balance is the sum of both. So it will be 9. And why it is particularly popular in the US? Because in the US, we usually record the net sales revenue. In some countries where we record the gross sales revenue, we would have this journal entry. Accounts receivable, 7. Advertising expense, 2. Sales revenue, the gross sales revenue, would be 10. And the sales refund or sales discount, some countries use sales discount, but I don't like it because it's not a discount, it is a refund, will be the number to balance. So, oops, not dumb, some. So it will be the $1,000 remaining. So we can see this second scenario on these two ways. So the first one, usually based on US GAAP. The second one, based on IFRS or IFRS. Okay, guys, that's it. Thank you so much. Questions or comments, just leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.